Now let's begin with a small introduction on XRP and Ripple. Currently, XRP is taking the 7th rank amongst the cryptocurrency due to its unique feature and ecosystem. Also, guys, it has the world's fastest settlement system, and this transacts entire transactions in just fractions of half a minute. And folks, the technology platform and the name of the company in XRP. The XRP platform has filled in all the loopholes, some of which are causing major problems for the traditional banking system to perform at its best. Now they are on the verge of failing and losing their value. Some drawbacks, like of the traditional banking system, that are improved by XRP are the transaction fees charged by the banking system. And guys, the hefty, whereas this platform charges just the minimum fee rate. Traditional banks took 3 to 4 days. That is to complete a transaction, depending on the complexity. But this platform is much ahead of that, and it scales with each transaction within 4 seconds. And keeping all this apart, it has one case in the process by SEC and the government against Ripple XRP. According to a recent scenario, the case sounds to be in favor of Ripple. But the future can only be confirmed with court hearings in the coming days. This was an overview of XRP. And guys, let's take a look at its price history. XRP is a token with significant potential to excel in the future. Now it is well known amongst the investors, but even feared due to its stable and substantial growth. The community had a long-term thinking process behind its launch. In addition, the price of the XRP token was 10 cents. So since then, for 2 years, there was zero or very little momentum in its prices. The year 2017 marked a start in the growth of its prices. The bullish trend continued for a year, and it marked an all-time high in January 2018 at 2.05 cents. That year was the last time since today that the XRP market has seen such immense growth, but did not last for longer. We look at the current scenario. The price of XRP is 86 cents this year, had seen quite a good gain for the XRP token. Last year the prices lied around 0.2 cents. Now I compare to the current price that depicts the bullish trend for XRP, had already begun and in no time. There are high chances to bloom this year. XRP had seen 366% growth. It would have surely broken an all-time high if there was no market crash due to few reasons before the market crash. XRP managed to reach 1.78 cents on April 13, 2021. The price reached down to around 67 cents on May 23, which is almost down by double rates. However, due to its strong fundamentals, Ripple XRP is managing and trying to move towards bright growth. We all went digging about its history, but we need to take a look at its future. It was recently noted in the news that Ripple is recruiting a bunch of intelligent and brilliant employees and trying to make their communities. Thanks for watching, everyone. Be sure to subscribe.
What do you make of what he said and how we should think about being positioned here forward if he is right?
Yeah, so, I definitely agree that, and I'm not expecting the Fed to say much this week, so I definitely agree with him on that front. And I do think the Fed is doing a lot, but they're in this really unique situation where, again, we were in this event-driven recession, right, in 2020, and we're in this K-shaped recovery. And so the Fed has been very, very clear that they're watching two things. First, inflation, and second, employment. And so we're not making the cut regarding jobs, and we have this big disconnect, as John mentioned, between the amount of available jobs and the amount of people who are unemployed. So the employment situation is not meeting the Fed's test. So, in terms of, I'm not expecting them to do anything, right? And in terms of positioning portfolios, I think investors should be looking at inflation protection. As we still kind of coming through on the other side of this recovery, we are going to see continued inflation because we started from a very low point. So we have to kind of get back to where we were before. And so a couple of things that we're thinking about in terms of positioning portfolios. We never gave up on growth, of course, but we're selectively adding value, right? Value. I think I read a stat earlier this morning that in terms of investment portfolios, value is making up like about 72% of equity portfolios right now. And so, but I do think that we're going to see a rotation back into growth. Diversifying across style and size. You should definitely be invested in small cap stocks also because they're having a moment, but diversification is the key. And if you're in funds, like we're favoring active management over passive strategies in asset classes where we weren't seeing that before, right? Where investors traditionally went passive, like U.S. large cap growth. And all I can say is we're not investing directly into Bitcoin, not for our clients.
Okay, so Joe Terranova, I could say maybe it comes down as easy as this question: should I buy the banks? Should I buy the free ports? Should I buy the marathons? Or should I buy tech? Now, PTJ also suggested that if the Fed does nothing this week, that the NASDAQ could rip. Let's listen to what he said, and let's talk about that on the other side.
If you just look at the amount of quantitative easing that we have planned just between now and December, and you think about the 60% correlation between the NASDAQ and the reserves that the Fed holds, you could argue the NASDAQ is going to go up 20% if we stay on this pace.
What's your thought on that? I mean, theoretically, we're going to use his words, stay on this pace.
I think your forecast is S&P 500 flat to down 10% by October.
Yeah, the pivot in the market clearly is going to be mid-year. We're in June. But I actually think the dollar goes up because it's counter-cyclical. The Chinese tightening is going to have a market effect. It goes the opposite direction with the dollar. As the dollar goes up, the commodity prices, such as the CRB index or the industrial commodity index, they're going to weaken. And as that happens into the late summer and autumn, those names related to that will sell off. They're, much like the earnings in the first quarter, which were extraordinary. It was buy the rumor, sell the fact. I mean, we're still pretty close to the same price we were around the 7th of May on the S&P 500. So I don't expect much more lift for that trade. I think we're in this topping out process, and I'm in the defensives.
Esty, I want to get your thoughts on the Treasury market right now. I mean, it seems primed, or at least according to a number of Wall Street strategists right now, primed for a sell-off. How do you see it?
Well, positioning has remained short throughout, right? We've had this rally recently. Some of that could be seen as a short squeeze, but the reality is positioning is still quite short. From my perspective, I think the question is, what can really surprise the Treasury market? What can surprise us enough to get the next leg up in yields? We're not going to get, inflation clearly wasn't enough of a catalyst. Non-farm payrolls, I think at this point, our expectations are that they are going to rise and become much stronger for the coming months. I don't know if that's enough of a surprise. We have expectations on infrastructure. It is true that at some point later in the year, growth is probably going to decelerate in China for sure. In the U.S., maybe not quite into Q3, but later on. I don't know what big boost could lead to that next leg up in yields.
Hey, Barry, if you're right, is this a green light for the tech trade?